Hey everyone, Jason Farris of Waller Financial. Today we're going to take a look at an extremely helpful tool used to illustrate key investing principles, the periodic table of investment returns. There are various iterations of periodic table investment returns, but all generally show investment returns for various asset classes over the years. The asset classes in our table are bonds, commodities, global bonds, international stocks, emerging markets, small growth in value, large growth in value, and cash. Also note each asset class is assigned a unique color. In this chart, asset classes are organized by calendar years, and we're taking a look at the last 15 years from 2003 all the way through 2017. The rankings change every year, thereby demonstrating several key investing principles and concepts. The first being diversification. Predicting which asset classes will perform best in the future is an extraordinarily difficult task. Just take a look at the chart. There's very little consistency year over year. One example is emerging markets, identified by the gray shade. It was a top performer in 2009, and then it dipped a little in 2010. In 2011, it was a worse performer. It was back up near the top in 2012. And then it was near the bottom the following 3 years. Another key concept this chart nicely illustrates is the difference between absolute and relative returns. When analyzing performance, it's important to have both halves of the story. Let's take a look at bonds shaded in red. In 2008, 2011, and 2015, bonds were near the top from a relative performance standpoint. However, it wouldn't be considered a banner year from an absolute return standpoint. Over the last 15 years, there's only one other year the top performing asset class had performed worse. Rebalancing is important. Various asset classes obviously experience different performance, and sometimes the differences are vast. Therefore, portfolios will drift from their targets. Rebalancing will help keep your investment portfolio aligned with your risk tolerance. Maintaining perspective and long-term discipline can be difficult. Remember, short-term fluctuations are inevitable, and returns tend to stabilize over the long term with a diversified portfolio. Not experiencing all the highs and all the lows, but attempting to capitalize on the benefits of a diversified portfolio may position you to achieve your goals. The periodic table of investment returns is an extremely useful resource for investors. It's a simple visual tool to help you set your expectations regarding your investment portfolio. By the mere definition of diversification, your investment portfolio will not be as strong as the top performing asset class, and it won't be as poor as the bottom performing asset class. Make it a habit to review the periodic table of investment returns chart to gain a better understanding of the investment market as a whole, to help maintain a realistic expectations about your investment portfolio. For more information on this, check out the link below.